Well, China's Geely Auto reports results in the week ahead. The analysts out there expect profit to be up 28% in the first half. And just earlier this month, the company completed China's biggest overseas acquisition by a car maker. It's expecting sales to grow by a third this year, even though demand for cars in China is slowing down. Geely shares losing just over a third of their value this year. And in the Hong Kong session, we'll have a look at those. In a declining market, we should add, down 0.75%. Let's get more insight on not just Geely, but the rest of the Chinese car market as well, and get straight to our guest, Bill Russo. Bill is president of Synergistics and senior advisor with Booz Co. Bill, thanks very much indeed for joining us. Right, Geely, let's talk about this company here. So, it's warning a little bit about the second half, but, what's your outlook? What's the sort of strength that we're going to be looking at for Geely?
Well, I think this year you're seeing a transition occur in the marketplace. First of all, the story last year was the growth of the China auto market, which was largely fueled by incentives and tax breaks for first-time buyers. So the big story last year was quantity of sales. This year you see lower incentives rates and a deceleration of growth, although still very strong. You have high double-digit growth last year. You have low double-digit growth this year, which is an enviable position to be in. But the shift in the focus has to be from quantity of sales to quality of sales. So companies like Geely and other domestic local Chinese car companies have to shift into building brands and establishing their reputations in order to retain customers, not just attract first-time customers.
Bill, does buying Volvo do that for them?
Well, it's a step. One of the things, you need proof points in order to build brand and reputation. And it does two things. First of all, it brings a European luxury brand into their portfolio. It gives them the opportunity to help position that brand for growth in China. And it also helps them learn how to build the skills of being a global car company, which is something every Chinese car company today is in a position of relative disadvantage with. So it positions Geely to be able to accelerate their development.
All right, as we look ahead, you say it's going to be about the quality of the sales that they make. It's also about how much money they're going to have to also discount, perhaps with these incentives gone, and on top of that, perhaps more, let's say, more aggressive competition out there as well. What does that do to profits for these companies?
Well, I think this is a market that I would characterize as being hyper-competitive. You've got virtually every manufacturer in the world coming after the growth opportunities in China, because it is one of the few markets in the world, auto market, that is growing. And you've got a lot of very ambitious Chinese car companies. If you look at the next 10 years, the capacity that is to be added to this market is somewhere between 8 and 10 million units to a market that today has 16 million units of capacity. So we're talking about a market that's going to have to aggressively compete to win over the hearts and minds of those consumers who today still purchase 71% foreign-branded products. Most of that capacity that I mentioned is coming from local Chinese car companies. So the pressure to incentivize products to continue to sell out the expanding capacity is going to be very high.
Yeah, so capacity, hyper-competitive, as you're saying here as well. Does that come to quality as well? I mean, Bill, what are these cars like? Are they any good?
Well, I think the Chinese car companies are learning and growing and getting better faster than any developing market has prior to it. The growth that we've seen in the first few years, and remember, these car companies are probably a decade old, in some cases maybe 15 years old. We're talking about the second generation, third generation of products that they're manufacturing. The first two generations of products were all reverse engineered. They're only now beginning to do their own self-development. They're getting better, but there is quite a long journey ahead of them in order to become world-class car companies.
Yeah, Bill, out of them, which ones would you think are going to make it first?
Well, I like the moves I'm seeing being made by companies like Geely. I think they're positioning themselves well for the future in terms of filling the gaps and where their competencies are in brand management and technology management. Another company I think very highly of is Great Wall. Great Wall has already established export foundation and has already certified their products for sale overseas in Europe and other markets. So the companies that have the ability to not just deliver entry-level cars for local first-time buyers, but cars that can meet the needs of a of a more international taste are the ones that will survive.
Bill, thank you so much for joining us. Bill Russo there, President of Synergistics and Senior Advisor with Booz and Company there, just talking to us about the Chinese car market.